Welcome, everyone. Chase, my buddy.
Good afternoon. Good afternoon. Let's get this all ready to go. Real quick. You there, DJ?
I am here.
How you doing today?
I'm doing wonderful. I'm doing great. Just got off of work about an hour ago. I'm ready to do this. I'm ready. I'm excited. Yeah. How about you?
Doing well. I'm just outside tossing the pigskin.
There you go.
My camera's not working. It's not loading up. But I fucking wore something presentable, and I got my fucking pants all green because we're literally throwing the football over the house. And we were trying to catch it and shit, just doing stupidity. But other than that, man, just life's good. Everyone's talking about the markets. They want to know what's happening. I guess we got a nice little script here to read off of. Very insightful. Pretty much going off of Trump's economic plan and how that is, going to be utilized for a potential bull run into Q2 and the Q4. So, god damn, why isn't the freaking camera working?
No camera. It's okay. It's all good.
You got your camera on?
Yeah, my camera's on.
Oh, god damn it. Checking my internet real quick.
And
well,
you sent me.
Until that works out.
You sent me it, right? I have it, right?
Yeah.
Okay.
So, getting into the basics, the U.S. economic update, Trump's economic strategy includes pushing the stock market to drop by at least 20%, which encourages investors to move their money from riskier investments like stocks into safer ones such as U.S. government bonds. This shift drives bond prices up and interest rates down, making it cheaper for the government to borrow money and pay off its national debt. The ultimate goal is for the Federal Reserve to lower interest rates to nearly 0%, which would ease the burden of the national debt and free up funds for other areas of the economy. To further this plan, Trump is using tariffs, taxes on imported goods, to encourage the U.S. companies to produce goods domestically rather than rely on imports. He's also encouraging U.S. farmers to sell more products within the country, reducing reliance on exports. This keeps more money within the U.S. economy, potentially lowering consumer prices and fostering job creation. By encouraging domestic production, Trump aims to make products more affordable over time, contributing to a deflationary cycle where prices decline rather than rise. Trump has also been deliberately adjusting tariffs, causing market instability. While some believe tariffs continue to raise prices, his goal is to foster a long-term decrease in prices, encouraging more local production. This deflationary strategy is intended to reduce costs for consumers, stimulate investment, and also stabilize the economy.
I love it. I love it, Chase.
You wanna talk about the deflationary cycle and the stock market recovery, Mr. Rambo?
I can. Just give me 1 second. The one that I have is the one that's the 3 and the 4 and the 5. That one. I don't think I have that one. I remember you sending it to me. I had it pulled up. I don't have it anymore. But in the meantime, could you send that to me? But in the meantime, what Trump is trying to do, it's very unorthodox. It's one of my favorite words to use. He's trying to figure out what to do with all these countries and what he's trying to do for the U.S. in general. And it takes a toll on the economy when things are trying to just drop off. There's things that are going to be coming into play that have never been seen in the country. A lot of things like talking about the IRS, talking about Social Security, talking about no taxes for people that make $150,000 or less. Huge things when it comes to different ideas that President Trump has when it comes to this economy. It's very important to think about going forward how we can use that information in order to make some sort of profit. Perfect. Awesome. Thank you, Chase. I think it's something where we have to just keep a really, really close mind to, and we have to be able to monitor everything based off of different moves that happen. Things out of DC happen quickly, and you just got to be ready for it. What do you think, Chase?
Yeah, especially when he's letting go all these government workers, and especially the IRS workers. Pretty much, he's trying to get back, to bring all the wealth back to the people. I mean, pretty much 91% of the wealthiest people have a big majority of the stock market. So 8% of retail investors are, panicking that stock market's down 10%, almost entering into correction territory. On the other side, it's you look on Yahoo Finance, you look on The Street, you look on any reputable article publisher, and it's just all fear mongering.
100%.
Trying to make you scared. They like you look at gold at 3,000, silver at close to $33, close to 35 actually.
Mm-hmm.
And the flight to bonds, especially. We can talk about Warren Buffett and his strategy. He's got like 285, maybe $300 billion of cash just kind of sitting there.
Yes, indeed.
And he's just pretty much invested in bonds, packing in that 4% right now.
Yeah, it's really crazy seeing Warren Buffett on the sidelines. When someone like that, with that kind of status is on the sideline with $300 billion, it should raise a light bulb in your head. It's very important to think about when you're going into investing and putting money into an asset, like what are the big players doing? And Warren Buffett is one of those big players with Berkshire Hathaway, where he's on the sidelines right now. So that being said, we have to be careful when it comes to approaching this market. And, obviously with President Trump going in there and trying to, just try to rumble a couple feathers and see what he can do when it comes to trying to stabilize the economy. I know another thing that we can talk about later. I mean, I want to go through like the the deflationary cycle and stock market recovery. That was a crazy stutter. But the M2, that was nuts. The M2 is off the fucking charts. Like, it is insane what the M2 is looking like. But I'm gonna hop into this, Chase, if you don't mind.
Yep.
So
if you wanna take away the deflationary cycle and the stock market recovery, go ahead.
Deflationary cycle and stock market recovery. Trump's short-term deflationary approach is designed to reduce costs for consumers and stabilize the economy. By temporarily lowering prices, he hopes to ease the financial strain on households, encouraging more spending and investment. As the Federal Reserve cuts rates and the national debt is refinanced, Trump expects the stock market to rebound later in the year. Lower interest rates would make borrowing cheaper, stimulating business growth and boosting stock prices, eventually strengthening the economy. For example, higher tariffs and increased local production have reduced the need to export agricultural goods like eggs, demonstrating how tariffs can lower consumer prices rather than raise them. Trump's plan is to create a short-term dip in the stock market, using it to reduce the national debt and prepare the economy for future growth. Once interest rates are lowered, the stock market is expected to recover, and the economy should see stronger growth. And that is very important.
That's what he's been saying.
Yeah.
That's what he's been saying. He's like, I'm not looking at the stock market. He's doing a lot with crypto right now. But he's like, there's going to be a boom. You know what I mean?
Yes.
There's going to be a boom. Like, there's going to be some sort of growth, especially at the end of this, at the end of the rainbow here. I mean, Tesla stock's down 50%. Everyone's, like, sitting here, like, what are we going to do? Like, is it over? Are we in a recession? But pretty much, like, to get into the global market sentiment, Trump's really using the tariffs as like a strategy to basically make better deals for the U.S. Because who issue, let's say, 25% tariff on China, then they're like, oh, let's do some deals with AI chips or whatever, and then they takes it back, and then we get it helps out the people, pretty much, and like the 1% of the people in the know. I mean, obviously there's insider trading like Nancy Pelosi,
Oh, of course.
but at the end of the day, it's a lot better for us than it is for the other countries because we're making a business deal, the art of the deal. You guys know I'm hater and love him, but he's the deal maker. But to get into the global market sentiment, Trump's tariffs and the market shaking actions are causing U.S. stock prices to fall, prompting investors to shift their investments in the U.S. government bonds, which he had established before. They're considered safer, and this shift has less impact on everyday people, but affects wealthy investors and large companies who own most of the stock markets, as mentioned before. As a result, Trump's strategy may be easier to support politically, as it primarily impacts the wealthier class. Globally, tariffs and supply chain disruptions are also negatively affecting the stock markets in countries that rely heavily on trade with the U.S. Nations like China, Germany, Mexico, Japan, South Korea, and Canada are facing higher costs and reduced demand for exports due to these tariffs. As a result, stocks in companies from these countries, such as Volkswagen, Toyota, Samsung, are very vulnerable to these declines.
Mm. A lot of that comes from, I mean, China, Germany, Mexico, Japan, all those countries, we also rely on them kind of heavy too. We get a lot of stuff out of China, and when we say we're going to put tariffs on, imports, we'll see how that happens. But with all of these countries, it really is coming down to trying to manufacture in house. Give the U.S. the power back that we used to have, and just using that as leverage in order for us to have all of the power in order to strengthen our country that we know it. Very, very big. Chase, what do you think about what you just read?
Well, especially what we just read. Obviously, like Trump will come out, let's say on like a Tuesday at 1 o'clock, and if I'm trading these markets and I have no idea about that edge, it's a big mover. Obviously, like I guess I want to tie this into the deep seek news with China, and
Mm-hmm.
pretty much that all that really was is just market manipulation. Do I believe China has better AI chips? I don't really care. You know what I mean?
Right.
The way that I kind of see it is it's almost like a big giant play or a simulation, right?
Right.
All of these narratives are lining up with the charts. So if there's, let's say, like if the retail logic, there's a double bottom forming, and all of a sudden, there's a V-shaped recovery, and everyone's like, oh, what happened? What happened? What happened?
Mm-hmm.
But it's all pretty much all because the news are lining up with the charts. And that's pretty much my whole ideology with investing. Not that I'm a chartist, I do like doing the macro and microeconomic research, but at the end of the day, it's almost like meant to be. Like you kind of have, as a trader, you have an edge, understanding the news and where this can drive price, and especially right now, with everyone being fearful. Everyone should be greedy. I know it like buying the dip, buying the dip, buying the dip, and the dip keeps on dipping,
Mm-hmm.
and you're like, shit, I got no more money to put into this. But the way that I was looking at it, I'm gonna throw in XRP here, because I've had a lot of people speculating about that investment. But I was looking at the overall Nasdaq. I was looking at companies like Tesla, Microsoft, and XRP is down 3% in 3 months, or 2% in 3 months. And all of these other companies are down 30, maybe Tesla's 50, as I established earlier.
Right.
So I guess what we're really trying to do is kind of predict, or basically saying that there's going to be an upcoming bull run, especially in Q1. Another thing that we'll get into the charts in a minute, but pretty much we just been accumulating since December. So Trump got in November, there was this big rally, everyone was hyped, and then all of a sudden there was just a bunch of chop, like with the tariffs and everything.
Mm-hmm.
And then closer to March and late February, we started seeing this pretty big pullback in the equities markets, and everyone's getting scared. Not gonna lie, as a former bear myself, I was like, oh, this is it. This
Mm-hmm.
is our next recession. But the more I, did the research, the more that I kind of understand the markets. Is the markets pretty much run everything? They run pension funds, they run Social Security, so that really can't afford to happen again.
No.
And if it's gonna be like a playbook, like I would say like in COVID, right? So Trump's basically trying to stimulate the economy. So when these rates are lowering, we're going to talk about the Federal Reserve cut narrative in a minute here. But as these rates are coming and they're going lower, basically all that entails is Trump's trying to get people to put money back into the economy again. And as the federal funds rate lowers, which happens when interest rates lower, big banks and institutions start putting their money in the risk on assets.
They do. You're 100% right. Risk on assets. Like what are you supposed to put your money in? You have to take those risks.
Are you going to leave your money in a CD and get 4%?
No. Come on. Come on now. CDs
I
are
mean,
more, go ahead. You're good.
logically, like when you're like older, like that's like when you have your money made and you're trying to preserve it. Obviously, that's the correct call. But
Yeah.
I guess our target audience really is the younger generation,
Oh,
people who
100%.
are let's say 20, 18 to maybe 30. People who have the opportunity still to go to the 9 to 5, grind it out, work, and try to escape the rat race and get one. Basically, we're trying to invest in the Netflix before the blockbuster. You know what I mean? Or yeah, versus blockbuster.
Yeah. Trying to invest in Netflix when Blockbuster was a thing.
And
It's big.
that's the beauty of the market.
Yeah.
There's so many emerging markets out there. The next stream we'll probably talk about is XRP, and then the next one we'll talk about quantum computing. They're doing pretty well. We were looking at them; they're up 40%.
Yeah,
But
big day today. Huge day for quantum
but also
computing.
today that the Nasdaq added 1.3 trillion dollars to its market cap. But
Back into it.
I'm very optimistic about that. I do think it might be a leg higher to go back lower because currently right now we retrace 10% and we have another 10% to go if this narrative that we're bringing to you guys plays out. So it might get harder before it gets better. And I really think that we'll talk about this coming up with DJ. That the economic data from April to June is going to be pretty optimistic to lead the Fed in the cutting rates.
Yeah, so the economic data, inflation continues to be a concern, though it is showing signs of slowing down. I know we've been seeing things about the eggs, seeing gas come down a little bit, just to name a couple things. While consumer prices are gradually decreasing, inflation remains something to monitor as it can still impact the overall economy. At the same time, economic growth is slow, with reports indicating that factory output and consumer spending are not growing as quickly as expected. Um, this suggests that the economy is recovering at a slower pace than hoped for. Yes, indeed. I don't know how quick he wanted it to happen, but these rates. What's gonna happen? Are we gonna cut? Are we gonna hike? I think we cut. We have to, at this point, just to get everything down. The value of the dollar is just gonna go down for a little bit, versus the euro, the pound. What do you think, Chase? You think the dollar's gonna go down
Well,
versus?
it's nice. It's nice to hear that mortgage rates are coming down, and I think that they're going to keep coming down further, which is going to be great for young people getting into the housing market.
Yeah.
I think it's going to provide stability in the commercial real estate industry,
Mm-hmm.
and for those foreign exchange traders, the pound, euro, and yen are looking like pretty good buys. Look
Yeah.
at the Swiss franc.
Yep.
Especially that's just kind of how it works. Whenever and even gold and silver, because that heavy dollar, the strong dollar. Granted, it's great for bonds and people in the fixed income investments, but for the stock market, man, it's for those people who are risky and they kind of need that 10% a year growth. It's not really looking good for retirement.
No, it's not. And the thing when it comes to working inside of a bank, you see it people all the time. saying, oh, hopefully the stock market keeps going up. I'm about to retire. Oh, I want to be able to put more money into the market, but I don't know what to do. Like so many people just come in and they're asking these questions of what should I do? And obviously I can't say anything. And um, the financial advisor,
Neither can I.
yeah, none of us can say what to do, and it's kind of frustrating because I want to help, but you can't. Um, you really can't say anything because you're kind of with like a gag, like some sort of like gag in your throat. Yeah, exactly. I can't say anything because I'm not allowed to. But it happens all the time. These people are coming in asking what to do, and it's frustrating.
The only thing we can really offer is an opinion, and
That's all we can
I
do.
think that this piece of paper right in front of me, this analysis, is a lot different than what any mainstream media is advertising. Not that this advertises hope for the Q2 to Q4, but it's almost like a narrative that this was going to happen from the get go of his economic plan, because he was like, "Oh, I have an economic plan." But I don't really know how it's gonna happen. Everyone kind of gave him shit for that.
Yeah.
And I'll look on Twitter or whatever, and I'll see like the Democrats talking shit like, "Oh, S&P's in the red, S&P's in the red. We got a Republican president, blah blah blah." And not to get political, but pretty much I feel like the whole Biden administration, that whole market was just propped up, pretty much almost. And now it may take another, which would be kind of tough considering Trump wants to lower our deficit. But there's going to be some money coming back into the people, especially getting into the global money supply trends. But pretty much to get into why Trump is lowering the market, I'm going to skip through because I can talk about why his strategy to push the market lower is focused on getting the Federal Reserve to lower rates. But pretty much as stocks fall, more investors are buying bonds, driving the bond prices up, which pushes interest rates lower. This encourages the Federal Reserve to cut rates even further, pushing interest rates lower. This encourages the Federal Reserve to reduce its, or this, sorry, this makes it cheaper for the government to reduce its debt and free up resources for growth. Tariffs and cost-cutting measures have already helped reduce the national deficit, but more work is needed to fully balance the budget and ensure a long-term fiscal stability.
Yes. The Federal Reserve, is he going to listen? Is he going to be able to make these decisions based off of what we see going forward? It depends on
Well, I mean,
it depends on a lot of things.
well, their whole job is basically to keep employment and to stabilize prices.
Mm-hmm.
And if the data is showing that, hey, like inflation's obviously coming down, the employment data's kind of looking rough right now, so they really need these interest rate cuts. Because if they, hike rates again, then it's just going to cause mass unemployment. There's going to be pretty much the way that the economy is. It's like oil in a car. If the car doesn't have enough oil, then it's not going to run properly. So, although cutting rates is another way of saying, hey, we're going to print more money, this is technically needed in the monetary system that we currently live in. It's designed to have crashes. It's designed to have bull runs that last 4 to 5 years, and pretty much every time it's a recession, it's pretty much a bite in the ass to the generations coming into the world. It's going to be
100%.
a lot harder. Houses are going to be more expensive. Stocks are going to be more expensive, and especially with AI now, that's a whole nother issue. I call it issue. It's a blessing and a curse, but pretty much your job can be taken and done. It can operate 24/7, and it's way smarter than us. It has no emotion, so it has no sick days.
No, it doesn't. It's crazy. It's crazy to think about.
Very, very interesting to look at, and we'll talk about that in an upcoming stream about AI and job markets and things like that. But it's the Federal Reserve is pretty much at the hands of Trump right now. So it's almost like Trump designed this whole plan to get the Fed to obey to what his outlook on what we should do with rates should be.
Yeah, when it comes to the Fed, you think Trump has him in his back pocket? You think, Chase?
Not to put the tin full hat on, but I really do think so. I really do. I really do think so. I'm not gonna lie. I think that. I mean, the way that I see it is, Jerome Powell was at Jeff Bezos' like parties and stuff like that.
Yeah.
So like, pretty much all the wealthy elites are connected. And to think that this guy gets paid what, like 300K a year,
Cap.
like there's got to be some way that they select these people into these positions of power.
Yeah.
Because the
No
Federal
doubt.
Reserve is ungoverned. It's not a government entity. It doesn't have to obey Trump. It doesn't have to listen to Trump. Um, it basically operates fully on the data that is in front of it. It has
Private
modules,
corporation.
it has this forecasts, and it's like, hey, listen, we don't want to cut rates yet. Inflation's still sticky. Employment's going higher. CPI's lowering. PPI's lowering. So it's like, well, if your whole job is to stabilize prices and, well, you mentioned oil before. So oil's pegged to the dollar. So as those interest rates decrease and the dollar weakens, then oil via the petrodollar deal is going to go lower, and gas should be a lot more affordable.
I definitely could see that 100%. Gas went down. Well, in Maryland, gas was at 279 about 3 days ago, and then they jumped it up a little bit. Now it's at 297. But next week and the week after, we should see it come back down to where it was before at 279. And I saw that yeah. People in PA are paying 40 cents more for gas than in Maryland. That's like the average. It's about 30 to 40 cents more in PA, which is nuts. That's crazy. Another thing is with eggs. Like I was saying, eggs were very, very expensive, and they're coming down. The cost of eggs are coming down a lot. What was that?
From what I researched earlier, my buddy Jan was like talking about. He's like, "Oh, eggs are still expensive," and I was like, "No, dude, like eggs are like $5 a dozen." He's like, "Well, I can't get them anywhere," and I was like, "I don't know how to explain that." Truthfully, I don't research eggs. I wish I would research like a bunch more in the commodities like wheat,
Orange juice.
and
Hashtag
orange juice,
X,
like all this kind of stuff.
ICT.
But
Orange
I like
juice.
like stocks and stuff like that. Maybe one day I'll stick my nose into that topic and category. It would be a lot more beneficial to me as an older adult and stuff like that.
Mm-hmm.
But eggs are coming down, and as I established before, tariffs are really bringing the cost of eggs down. It really kind of sucked that the previous administration killed all those freaking chickens because of the bird flu. Do I believe the bird flu happened? Absolutely not. COVID was a hoax. So, like, what kind of other diseases are they really going to make up to cause mass shortages? A whole war in Ukraine destabilized the wheat markets. Ukraine was a big supplier in wheat. So, wheat obviously went up because they're destroying all the crops and stuff like that.
Mm-hmm.
So, it's pretty much what cards are going to play to influence certain markets.
Which ones? Which ones do you think, Chase? Do you think they're going to bring out something that's maybe like a war? Why would they do something like that? They wouldn't do that to us, right?
The way that I see it is, with pandemics, with war, there's profits on the other side. We have defense companies here in the U.S. There's European defense stocks. There's I don't know what the British defense stocks are looking like. I don't think they have much of an army.
Now, Chase, why would they do something like that? Why would they want to hurt and kill innocent people? Why would they do something like that?
An agenda, almost.
It's nuts.
And I don't want to paint Trump as the golden calf, but I mean, we had a peace agreement signed with Ukraine and Russia.
We did.
I think that whole war was just a money laundering operation. I mean, Christ, that war's been going on since the 70s, 1970s. My dad was telling me about it. And they get all this money from, let's say, Obama. Let's say they get money from Biden. And then they're still like, oh, we need more money. We need more money. Not to shit on my sister. I love my sister. But every time I turn around, she's calling my dad. Hey, Dad, can I have money? And then like she'll be at the bar or something. I'm like, oh, that's fucking great. You know what I mean? And
Oh
then
my
the
god.
other day, she was talking about spending $80 on gas, and I'm like, that's impossible.
What is she driving?
But
A diesel truck?
she's got a Jeep. She's got a Jeep.
Okay.
Not the shit on Jeeps, but freaking what's it called? Jeeps freaking suck. They're terrible, terrible cars. They're made to break.
Made
They
to
were only
break.
effective in World War II.
Yeah,
World
yeah,
One.
yeah. Uh-huh. I hear you. I hear you. You want me to jump into the global money supply?
Well, we gotta do the rate cut.
I thought you were. Oh, no, you're right. The rate cut, the Federal Reserve rate cut. The Federal Reserve remains cautious but is under pressure to lower the interest rates due to the unstable market conditions. As Trump actions continue to drive the stock market down, it is likely that the Federal Reserve will lower rates even further to stimulate the economy. Lower interest rates make borrowing cheaper for the government, businesses, and consumers, which can contribute to economic growth. Refinancing the debt in the U.S. You gotta be able to bring the rates down to refinance the debt.
So I was listening to a video. I put it in the Discord. But pretty much, they kind of, I think after World War II, they used the petrodollar to, in a way, refinance all this post-war debts. So it's nothing like this has never happened before in history. But it's almost like, it's a different situation. I mean, we got $36 trillion, $21 trillion pretty much minted in 2020, which was
I'm gonna pull up the M2
most
real
of our
quick.
money supply.
Yeah.
Most of the money supply. And right now, especially for our generation in, the 2002, and I'll even speak to the kids born in like 2015, it's going to be tough. You know what I mean? Like, money needs to be more stable. We can't afford to really have all these periods of low inflation and high rates because we're not going to be able to get houses. Stocks are obviously going to be a pain in the ass to buy at record highs, like most people were buying them at. And it's things need to be a little bit more level. There's got to be a level playing field for our whole monetary system, and I guess that gets into what we'll talk about next stream is stable coins and special drawing rights and a potential gold reserve. They're trying to audit Fort Knox to see if the gold's in there. In the meantime, there's a lot of countries sending their gold to the U.S., which is very interesting. Canada is kind of screwed because Canada has no gold reserve, so I can definitely see a potential them joining the United States. I know that sounds crazy, but they don't got the cards. They really don't. They got so their capital gains tax is like 65%. So if you make $100,000, you pay $65,000 in capital gains taxes.
That's ridiculous. That's insane.
At that point, you're just taking wealth away from everybody.
Yeah.
And it all funnels into the pockets of the people who run the system. And I guess we're going to talk about right now the global money supply trends because they are growing.
Yes, they are.
Central banks in other countries are increasing the money supply to slow down economic decline. This action is designed to stimulate growth and prevent further contraction in their economies, while the Federal Reserve is focused on reducing the money supply in the U.S. Increased money supply from other countries could weaken the U.S. dollar, as more global currency in circulation can reduce the demand for the dollar. If the money supply continues to grow globally, it could lead to higher prices and a rally in the market. If Trump decides to take action to boost the economy later this year. So as bearish as everyone is, man, there's an old Wall Street saying that when stocks go on sale, everyone runs out of the store.
No, but seriously,
And
everyone does it.
I'm not gonna lie, it did have us for a little bit.
Oh,
like when you're seeing like
100.
Like, I'm asking myself, like, Trump's good for the economy. why is he doing this? Why is he doing this? And then coming in March, I stumble upon this narrative. I was like, where was this in, February of, the February 21st? I think that's when the stock market peaked. And we'll be diving into the charts. We're just going to go over the NASDAQ. We're going to go over the S&P. We're going to go over gold, silver, and basically the currency pairs. And kind of on the charts at least, try to make some technical analysis forecast to see where the high could be, where the low could be, potential areas of interest we want to see price trading to, and it's pretty interesting because here I'm gonna share my screen at the moment.
I got the NASDAQ pulled. I got the NASDAQ on mine right now.
What's up?
I got the NASDAQ on mine right now. On my screen.
A word?
NASDAQ.
I can't see your screen.
Oh, right.
Can you see my screen?
Through the Discord?
Yeah.
Let me see. Yes.
Okay. So I had something like this. So we had this rally today, and my areas of interest are this order block right here at the 17,370 level. And I had these, this is called standard deviation. So what it is a measurement from this low, this high, and we're going to kind of break all this down. So on February 18th is when the market topped. And if we look on February 18th right here, the NASDAQ or the S&P made a higher high than the NASDAQ. So this would be defined as a smart money trade. So smart money is loading off their S&P calls and starting off puts into the NASDAQ. So from there, we have retraced 10%. 20% right here puts us right here. I think we can come back into this 20,000 level as an area of previous resistance to come further down and take all of this resting liquidity in these areas. And this move puts us at a 2.5 standard deviation. The 3 would be closer to below 17,250. And what I'm looking at is I'm looking for a move lower, and to confirm the trend I want to see a break of the high right here. And this is a little exaggerated. I don't think it's just going to be a V-shaped recovery. Motherfuckers. But it's going to keep going higher.
I still like sells. I love the sells. I love the sells. Sells for now.
Yeah, they're just engineering the liquidity for things to go higher than they go lower.
Yep.
And then right here, so this is just a forecasted image. This is a higher high made on the NASDAQ and the lower high made on the S&P, which would be the smart money reversal. So basically, in order to identify high time frame trends, you want to see something like that happen, especially on the indices. This is the futures, to be honest. So the prices aren't going to reflect the same as the overall NASDAQ and S&P. I just like to use the futures because you get a more clarity approach when it comes to where these markets are going to go. So, especially with gold's over like $3,000 on the futures. So, when we came in, we filled in this inefficiency right here. This is the September fair value gap, BPR. And we found some resistance here, or some support level here. And I'm curious to see how this order block maybe comes into play, or if we just keep extending lower. This little buy was to engineer call options.
I love it.
And the same thing, the NASDAQ or S&P puts us at a 3 standard deviation. So we're looking at a 18,000 and
S&P at 5,000 basically.
5,105.
Yeah. 5,000 S&P, 18,000 NASDAQ. That's what I had also.
Yeah. And then let me see if I got gold all charted off. Just the bonds. Yeah, we'll just go into the dollar real quick. So on the dollar, I gotta go on the weekly here.
I love this thing coming down.
We've been talking about this freaking area for
so long.
Years.
Oh my god. We were talking about that like a
Years.
year ago. Like seriously.
We've been talking about this for years. So it
Yeah.
came in and respected this side buy
Mhm.
inefficiency, buy side imbalance, and we just started dumping. And it's kind of interesting because whenever the DXY, this is like a measurement of the financial conditions. So whenever the DXY is high, that means that financial conditions are tightening, which means interest rates are going higher. However, with the stock market, it just started dumping, and stocks, equities, and everything started to follow that. So for a potential level, this is another standard deviation right here. Pretty much it's this high to this low, and this is just a manipulation. But we're looking at the DXY below 97.99, and maybe extending further below in the 94 area, which would be really good for stocks, really good for gold, really good for silver, really good for crypto. And I can go over here. This is the dollar yen, so I'm forecasting a UJ to come down here into the 136 level, potentially all the way down here to 127. I got the Euro USD. This is if you're trading, this is your bias.
Bro, that's another one
Potentially
that
coming
we've
up.
had. Like with that the fair value gap. Like the yeah, we've had that for I've had that on my chart for so long. I wanted price to just break under that sell side just so I can push higher. And then the
Yeah, this
US
was
dollar
just a
just being
long-term
weaker.
accumulation, and then you
Yep.
had the little manipulation move here.
Yep. And
So
now it's gonna
now,
take the high.
short term, or I guess long term, we're targeting 112, maybe extending up into this area of 123, 486.
Mhm.
So the euro longs look pretty good for the forex guys. Pound longs look even better. We didn't come into this inefficiency, but we probably respected this order block right here.
Yeah.
This order block right here to extend higher, and I'm looking at 142, 432. Do I know how high this can go? Could we come up into this? I have no idea, but I would say conservative.
It'll probably
Let's
take a little
target
bit.
150.
It'll
And what
it'll
else
take a
we
little
got
bit,
here?
but I think it's possible.
And then we got gold, man. Look at that. Gold
Gold
at
gold's
3,000.
nuts. Gold's crazy.
That hit. I can't believe that freaking hit.
Yeah, that's a great
Go
trade.
down to the
The
But gold, man, freaking at 3,000. Let me go into the futures. I think I have a better chart on
if only
the
I held that
futures.
if only I held that call on gold from a year ago. If only I did.
Here we go. It's a little better. Let's put it on the weekly here. Decline to look at this on
Yeah, that one's better. I
the
like that one.
daily. But silver, I'm looking at silver going to. I like $45 as a psychological level for silver. For gold, I like 3,326. I mean, we can do 3,200 if we want 2.5. But we got all these levels with the prices here. I think the gold and silver bull run is going to be where it's at. I mean, silver and gold have uh, outperformed the stock market currently. I got my boy Jam and Mason here. They're at my house right now, just bullshitting me. They threw a fucking stick at my sorry for my language, but they threw a stick at my window, and I was like, "What the hell are these guys doing?" But
Hey,
they're in the chat just memeing. So guys, here's your shout out. Here's your shout out.
who knows? Who knows what happens with gold and silver? Like, not who knows, but who it might get backed by something, or something might be backed by gold. Something might be backed by silver. What could that
So
be?
Jam said, "What's the silver dollar at?" So the silver dollar retired in like 1980. Um, but I think silver will be $50. I think that's going to be a pretty good one. So the silver dollar will always be $1. Hate to break it to you, but it was just backed by silver. But yeah, I think that they're gonna basically back our debt with gold. So that gets into the stream we're gonna talk about in the other day, special drawing rights, which is pretty much a commodity based thing. and it kind of goes back into the petrodollar refinancing of the post World War II debt. But basically, we would take our gold reserves and you know, basically whoever's got the most gold holds all the cards. So obviously, I think that China and the U.S. are pretty much hand in hand in this battle, and I think they're going to be the two countries that kind of rise out of this whole debt problem. And we'll be like, hey, we're gonna basically pay off our debt with the commodities that we have. Who do we owe all the debt to? We have $11 trillion of debt owed to Japan. So maybe Japan will get all that money, but who really knows? Japan's just one of the leading exporters, along with China globally, who have been sending a lot of goods and services to our country.
How about the yen carry trade? You want to jump into that for a second? You want to talk about that for a second?
Yeah, so pretty much the big thing is that hedge funds have been borrowing yen at a near zero, actually a negative % interest rate,
Yeah, they pay
and
you.
they pretty much hedge stocks against their borrowing. So like they're like, hey, we'll give you shares of the S&P and we'll borrow X amount of yen. And whenever, or it might be the other way around, but pretty much whenever the yen interest rates go higher, then there's this big carry trade that for risk assets, there's a flight to safety in the fixed income. So that's coming actually later this month. That's something I want to look into and kind of polish up. I wish I would have included that into this, but I really kind of wanted to leave it on Trump and the U.S. based. Um, but if we start cutting rates again and the yen starts hiking, and the yen is going to be looking like a pretty dominant pair to trade against the dollar or other pairs. GJ, I saw a guy trading the Swiss franc versus the JPY, and I'm like, bro, why are you buying the franc when the yen's getting ready to freaking, they're gonna hike interest rates, and when they boost, interest rates, then the yen becomes stronger.
So he was trading the Swiss franc against the yen.
Yeah,
What?
CHF JPY.
Oh man, that's like one of those pairs that I used to just like look at and be like, nah, I'm okay. Nah, I'm alright.
I really, I don't know. I feel like I had an edge trading the USD pairs
Oh yeah, I feel more confident on
just
the USD
because
pairs.
it's a little bit more like you use economics and it's just a better like hedge
Yeah,
almost.
100%.
Makes you feel like a little bit more confident in your trade. But that's we'll get into that eventually. I might do like my own like private like recording where I try to paper trade or if I walk you guys through like what I like to see in markets and stuff like that. It's been very tough in these conditions. I'm not gonna lie. It's fucking
It's so
brutal.
volatile. It's so
It's
volatile.
very brutal. Like especially when you get caught in a trade and Trump speaks like 5 minutes and you didn't know, and you're like, oh crap, this can go either way.
Mm-hmm.
Um, but that's something eventually I want to get into. Is I really like trading. I really like intraday trading. We'll dive into ICT and
Oh yeah,
those teachings.
that's a whole other lesson.
Another thing that I really want to advertise is the Discord. Let me
Yep.
put it up here. Do I have it up here? Yeah, time is money.
Time is money.
Um, wonder. I hope. Let me see something real quick. I hope. I hope time is money Discord's up here.
I have it
Everyone
on
can
mine.
see that.
I can
I'm just gonna disconnect it. There
yeah.
you go. Okay. Time is money. This is my little Discord that DJ and I run. We just posted a bunch of news. I wish I would have posted this earlier, but we have a risk disclaimer here. Risk disclosure statement. Pretty much going over everything required that we have to say.
Yep.
To be legal and not go to jail and give you guys some trust. But like we got the town hall where I just post a bunch of core news, retirement planning. Not that I can talk much about that, but it's pretty much the basics of retirement planning. Talk about bonds, talking about forex with charts, real estate. Contract to buy homes are dropping, commodities with talking about gold and silver.
Got the stocks with the annotations and news coming from that. What's happening with the crypto market, especially with Brazil planning to adopt stable coins to facilitate trade among BRICS. And this is where, if you guys want to learn how to read the charts, the ICT mentorship documents, I got all these documents right here. Thankful to the ICT community who really like drafted all these things up, so I can try to teach people or whatever. But it takes time, bro. It's like each one of these videos that you watch with ICT on his YouTube channel are like 2 to 3 hours, maybe sometimes four. So it's a hassle, It's like a second job. It's like taking a but honestly, dude, honestly, the logic we yeah, we really are like swing traders by heart. It's really tough to look at like taking a trade or whatever. Like yeah, like you'll have like I think my win rate was like 60% when I was like trading every day from January to I think like March. But like you get one of those red days, man. Those red, just being able to participate in the markets. But for some reason I can't even. Might be the OBS or whatever, but like you were trying to share your screen earlier, and I really couldn't see anything. Yeah, I can hear you. I just couldn't like see. I can't see your like picture or whatever if you were
sharing anything.
Oh, like on the OBS.
Yeah, it's probably the OBS.
I
We got the cameras hooked up and everything.
I think I got the chart. I got the charts on the OBS now. Charts are on OBS. I mean, there's XRP, there's H bar, there's S&P. There's just different things that we study. There's different categories of investments. When you for like the beginners when it comes to, looking at everything, looking at all of these investments. There's a lot of things that go into each of them, and it's nearly impossible to keep up with every single one day by day. You just have to take it one day at a time and just understand the general idea. Learn what side is. You have to learn, well, not learn one side. You have to learn both sides. You have to learn why it's long, learn why it's short, and understand that it could go either way. And if you have a bias, look for confluences and see the best way out of it. I don't know.
Hold up, DJ. We got a chat. We got a question. XRP $5 when I'm gonna put up the chart just because.
Oh,
we
sure.
got one.
Sure. $5 when?
Oh.
Well.
He said $5 when. Brother, what if I told you?
Brother, what if?
$20.
Brother, how about $30? But.
So here, let's talk about this real quick.
We can talk about it. We can talk about it.
Let me go into like a daily chart.
We could talk about it briefly, but we'll have a different stream on, crypto assets and what's going on with the government with crypto assets. But we'll brush on it briefly.
We'll go into like what we talked about yesterday. So
yeah.
There was if you look at the Discord, there was a SEC document posted. Let me go into the time is my Discord real quick under crypto. It was SEC Gov file CTF input Schrodinger, Maximilian Schrodinger. Basically, what he said is that XRP is going to be used as a commodity to free up liquidity from the SWIFT transactions, and it was an estimate that they would free up $1.4 trillion. And then that was I don't want to pull up the document, but they were going to take those investments, or I think it was $500 billion. They were going to take $500 billion and dump it into Bitcoin. Well, I like Bitcoin. Maybe for the long run, I do see Bitcoin potentially extending higher. Let me pull up a fib real quick. This may be the bottom, but let's see how high Bitcoin could potentially go real quick from standard deviations. So at the most, Bitcoin could go up to 200K. And let's do the
200,000.
same thing with XRP. Real quick, mark the bottom, mark the top. I just seen the standard deviations live. 4 standard deviation puts us at $8. But also, there's about 18 different ETFs pending for approval for XRP.
That's a
And
lot.
the SEC is going to take away its security status and change it to, hey, XRP is more so like a commodity. And there's a lot of steps for this to get involved. Trump has to sign an executive order. The Treasury Department has to sign some orders. And then the Federal Reserve and the OCC have to give the green light for XRP to be adopted. So the accelerated runs, we're looking at like 1 year for pretty much all of this to happen, like for SWIFT to be, or XRP to be able to use for pensions, for Social Security, and then like 3 to 6 months for it to replace SWIFT. So it's it's pretty much we're playing the time here, So if we look at XRP versus Bitcoin, XRP is really only down 2%. Yeah, it kind of sucks for the especially for myself, seeing it come up to $3 and almost 50 cents. But at the long term, we just got this big accumulation since December, and thankfully we've held up support. We've kind of come into, if I go into the weekly here, this little fair value gap right here, which was pretty bullish for me to see. I really want to see how it holds up this $1.90, $2 level. If we do come down, then I think that maybe this area right here of 150 acts as a support.
Yes. I was about to say.
That's really what I'm looking at.
$1.50.
Looking at some here for Bitcoin. Let's see, 73,000 acting as support. So it's pretty much about when it's all gonna happen.
Yeah.
I think I really optimistically, DJ and I were talking about this. Give them your price prediction.
Okay. So with my price prediction, it goes two ways. When me and Chase were talking the other day, we were like, if you're looking on the 4-hour chart, or the daily, this thing has this huge wick inside of the range that we've been in since December, and that wick comes down to 177.50, and it's been holding ever since. In the case of where this wick will get taken, I see price coming down, push up, November 28th. You see what I'm saying, Chase? On November 28th, on the Saturday the 30th, we see that push. And there hasn't been a price inside of there, and it has to build some sort of liquidity inside of that range. So, that being said, if it wants to come down, that's where I see it coming down to. Maybe we consolidate inside of that range for a little bit, and then we see it go, past 340 at the high and continue higher. My other prediction, and this is relative to a couple months to a year, I see that price. I posted this on my Twitter /X, whatever you want to call it, the other day, where both of these sides we see accumulation, and back in November there was this certain pattern where we saw price do, and it rallied from there. I could see price in the short term, from about now, maybe it goes a little bit higher, but I see it come back down into the 210 down to maybe $2 area, and that's going to be the low that we have. But I think this wick might stay intact, the one that we have on March 10th, this day that we had here. We keep that intact, we come back down into 205, $2, maybe consolidate for a little bit, maybe a week maximum, and then we rip just like how we did right before the election, going into 10, 15, and maybe even $20 in the short term. So there's two big scenarios that I see when it comes to the price of XRP. Both of them, I would either one of them I'd be happy with. At 154, it gives us a better price entry if you want to get in, because a lot of retail is in this consolidation after the election, and they're going to try to get retail out, try to scare retail out at 150. You got to be buying at 150. You can't be scared. When people are fearful, you buy. When people are greedy, you sell. That's how it works. But when it comes down to it, either one of them I'd be happy with, especially for the second one if we rally to 10, 15, $20 in the next couple months to maybe even a year. So that's my
So
opinion.
my belief is once XRP takes over Swift, it'll be $1,000.
That would
And
be that
what
would be
I'm gonna
huge.
say, what I'm gonna say is, I think that XRP will be pegged to gold because I think that gold will be a special drawings rights. Hey, how can we move gold in an efficient way, in a very costly way, without spending $500 billion a year moving it? XRP. How are we gonna open up the Nasdaq 24/7 and keep contracts very costly? XRP. So, but in the meantime, I do think that conservatively, $30 to $20 is what we're going to be looking at. I I'm going to say July, end of Q2.
That's a fair statement.
Maybe it goes higher, but looking at this little accumulation, the standard deviation puts us just below $9. So I'm being patient. I'm gonna let the news drive the liquidity, and we'll see. We're just gonna be patient. But I mean, I feel like we kind of overextended the time here. We were
Just a little
targeting
bit.
30 minutes.
Just a little bit.
Well, we got lost in the charts and everything.
We got
and
lost in the sauce.
explanation.
Lost in the sauce, Chase. Again, we want to reiterate these are only opinions and these are, not it's not advice. Do not take our advice without doing your own research. We know we have to say this. We don't want to be responsible for any of you guys losing money, and again, we're not licensed, so this is just for entertainment purposes only. That is it. You can take it how you want it, entertainment, or maybe listen to us. But again, we're not licensed, so that's what
It's
I
just
got.
an opinion.
Just an
It's
opinion.
research, analysis, and the way that we do our research is we're not technically wrong in our research. The only thing that we're really lacking is a license and in trying to do this for 4 years. We spent 4 years of our lives not chasing women, but chasing money and learning how the stock market actually moves.
And it's
And
been
I have the risk disclosure on my screen right now. Just
yeah, I put it up earlier, but
anyone
Read through. Also join the Discord server. Links in my bio. What I don't get enough questions in here. I'm scrolling through right now. It's just me, sending shit. And I would love if I could get more people to come in here and ask questions and really engaged and tested our curiosity and what we believe in. It would be kind of nice. And I mean, I'm no peer pressure. You guys can do whatever you please, but I just kind of hate when I have someone come up to me, "Hey, why is this happening?" And I'm like, "Hey, it's everything you need to know is in the Discord." And then it's like, "Oh, I got to go out of my way to kind of explain this kind of stuff." And not that I hate doing it, I really love doing it, but it's just kind of easier if everything is intact, you know. But man, but yeah, it's as scary as it is now. Have faith. Have faith. Be strong. The market will always destroy you mentally before it rewards you financially. I'm not gonna lie. Here, I'm gonna get a little personal here with the stream. Yeah, this might ruin my credibility, but I don't really care. So I was in Ocean City the one time, and it was New Year's Eve. Pretty. That was another day when the yen carry trade was unfolding, and I watched XRP go from 50 cents to 35 freaking cents, and I had a great deal of money invested into it. A great deal. It was pretty much my life savings. That's all I can really disclose. And I was tripping on shrooms, and I was like, "Fuck, man!" Sorry to use the explicit language here, but I was devastated. I was like, "How can this be?" I was like, "What is it too good to be true? Maybe it's too good to be true." But at the end of the day, when Trump got inaugurated, I watched this thing go from 50 cents to $2 and to $3, and I was like, "Oh my god! Oh my god! Oh my god! Oh my god!" And then he comes out with the strategic crypto reserve and names XRP, and then the SEC case with the Ripple. That's basically fraud. And well, the only reason why they're really keeping the case around is they don't want to lose their credibility. That's the big thing. They don't want to ruin their credibility. And yeah, you come at me with am I wrong? Who knows? I got in the next stream. I'm gonna have some freaking documents after documents after documents for you guys, showing you guys how long Ripple's been a contender and gonna be
Going back to pretty much 2010, like how long they've been trying to integrate XRP into the financial system.
Yes.
But I just want to conclude it up here and thank you guys. Thank you, DJ, for your time.
Of course. Thank you, Chase.
Or what was it? An hour and 30? An hour? Yeah, it was about an hour.
It was about an hour and 15, something like that. It was good.
I want to thank
you
guys so much. I hope this clears everything up for you guys. Yeah, it's tough, but I mean, at the end of this video, I hope you guys are a little bit more informed, a little bit more kind of use this information as to help build your own personal bias for your investing. As I said before in the disclaimers, make sure to reach out to someone who's licensed, ask them what they think. Try to, if you have to, take notes on everything that we said, because yeah, it kind of sucks listening by ear. I was always a visual learner, having to see things in front of me. But also ask questions in the Discord. We're regular people. We're not narcissistic. We're not better than you. We do this for you. We want to see you guys succeed. Same thing with DJ. I want to see him do well. He's at Bank of America. I'm getting ready to start a position at JP Morgan. And there's a lot of stuff that's going to be coming our way. And if we can be on the right side of history here, and if I can get you guys on the right side of history, not forcefully trying to, but I want you guys to be open-minded. And, pretend we're selling a dream here. You know what I mean? XRP to $50. How much do you got? And then multiply by $50.
That's all you got to do.
And then, it's pretty much outperformed Bitcoin this year, so it's a wild journey, you know what I mean? And then also utilize the ICT mentorship Discord chat so you guys can read price for yourselves.
Yeah, those are really good resources. Me and Chase have been, diving into ICT for I'd say 3 years now. It's been a journey. It's been a journey, Chase. It's been a very, very big learning lesson. A lot of information that Mr. Michael puts out.
Yeah, he's a goat.
He's the goat. He's very humble. Very humble guy, but not really at the same time. He's funny. He's
very cryptic. Very cryptic.
Yes, too. Yes. He's a very funny guy. He knows what he's doing.
The way that he designed all of his videos is he wants you to give up watching the video, and then all the juicy stuff is towards it's scattered in between bits and pieces. He'll start rambling about bullshit, and then he starts saying insightful stuff. Then he starts rambling about bullshit about people and other influencers and stuff. Then he gets back to the juicy stuff that we're trying to learn. So, it's very cryptic. You gotta literally put your time in. I'm still putting in time as we speak. I'm not mastered it. It's something that is gonna be, and that's the thing about the markets. They're not the same every day. So I have to go back and to my notes into the Discord channels and kind of research all these different things to help me build up a stronger bias.
Yeah, a lot of tools out there. You just gotta pick one up. That's all you guys gotta do.
Yeah.
You guys got to pick
I
one
try
up.
to give you guys all the cards, man. I really do. I
Yeah.
really like
It's all in your
DJ and I
fingertips.
both. They give you everything that you could ever, think about when it comes to building the future of your life.
Yep. And
Um,
with all this information,
Yes.
you would think we would charge, but guess what? It's all there for free. We want you guys to eat. We want you guys to win. Right, Chase?
Yeah, dude. I made a deal with God. I said, "Hey, God, I'll fucking do this for free. I want to help change people's lives. Not like Andrew Tate, but I want to influence people to do good
Yeah.
rather than evil.
Yep.
You can sit there and spend your money on sports betting. Don't get me started in the sports betting. That's a whole another area I don't really want to get into. That you guys like, oh, you're a nut. But I mean, for me, the stock
Right.
market, you have a better probability of making money than sports betting. Yeah, there's people who make money just like in trading who advertise how much they're making to get you to buy a course or affiliate themselves with a prop firm, and the same thing with sports betting. So pretty much the way that we're kind of advertise this is like, hey, dude, like we're all doing this together. When we're losing money, we're losing it together.
Yep.
When we're winning, we're all freaking winning. And we got about like 37 people in the Discord. I really want to try to get that number up to 100. That would be awesome. Because it just kind of shows, not that we have a lot of engagement in the Discord, but it's just kind of nice to see that there's people in there who are interested to see what we got to say. The research that we really put into it, and at the end of the day, if we're making money, then we're making money, man. Just promise yourself to do good with that money. Money's the root of all evil, so you gotta be one with the Lord. You gotta be grounded. It could all be taken away from you in a second. Right when you feel like you got it all together, boom, you're back to the drawing board again.
Yep. 100%. Can't agree more. It's
You
been
got anything to lead us off on?
shoot. I mean, I think it's a good thing that everyone can learn. Me and Chase, it's been, very very interesting about learning all of this information and how we honestly, I think you would agree, Chase. I think we perceive life in a totally different way with the way that we have, dove into the charts and dove into how really economies work around the world, how the stock market works, and manipulation with everything that comes into how people trade and how people try to get people out, and it's a bunch of different things that we've learned that are so important that makes us look at life in a totally different way when it comes to just money in general. But I think it's a really good thing. It's an awesome thing.
It's all about leverage, ladies and gentlemen.
Yep.
Just view the whole thing as leverage, and then it's easy.
Yep.
Well, easier.
That's all I got, Chase. Until next time.
But hey, yeah. Until next time, DJ. I think we'll try to have to figure something out. Maybe like I'll put like my camera on so people can see me, because probably I think the OBS stuff kind of screwed everything up. But
Yeah, we
dude,
could
it was a
probably.
pleasure. Thank you for your time.
Yeah, no problem.
Covered a lot of great content across. What was that, like an hour and 14 minutes we started
Yeah,
the stream.
it was big.
So it's a lot of information, a lot of just casual talking, but I hope you guys walk away with bits and pieces of what we said and apply it to your own lives.
All right, guys. Until next time, we'll see you.